morning. Happy Friday. You're watching Businessworld Live. I'm Danny Laurel. Let's kick off with our banner story. The national government's outstanding debt soared to a new high of 11.16 trillion pesos as of the end of June. This is on the back of a 12% year-on-year and 2% month-on-month increase in foreign borrowings, which are meant to help finance the country's pandemic response programs. Fresh data from the Bureau of Treasury show that the total debt stock was nearly 8% higher month on month than the end May total of 11.07 trillion pesos. This is also 23% higher than the 9 trillion peso debt recorded in June of last year. RCBC Chief Economist Mike Ricafort says the debt stock inched up to a new high as the government needs to plug its widening budget deficit amid the pandemic. The government plans to raise 3 trillion pesos this year to help fund its budget deficit, which is seen to hit 9.3% of GDP. Ricafort says the debt pile may continue to increase in the coming months as spending rises, especially on the infrastructure sector and ahead of the 2022 presidential polls. Now, various representatives from the business sector are divided on whether NCR should go on a hard lockdown. In a statement, the Philippine Chamber of Commerce and Industry said a knee-jerk reaction to declare a lockdown will cost hundreds of thousands of workers their jobs. ECOP President Sergio Ortiz Luis also told us yesterday that a lockdown will do nothing at this point but undue strain on the already struggling economy. But Presidential Advisor on Entrepreneurship Joey Concepcion is amenable to a 2-week hard lockdown as long as it is implemented now. He said August would be a good time to have a lockdown since business activity is muted as it is ghost month. Concepcion said we should protect the fourth quarter of the year and not impose any lockdowns then so as not to dampen an expected uptick in economic activity due to Christmas spending. Meanwhile, SAPI President Dan Chica says while everybody's worried about Delta, any decision must be measured. National Task Force Advisor Dr. Ted Herbosa is also calling for restraint given the economic impact of any restriction. Even Trade Secretary Mon Lopez has said several times that micro, small, and medium enterprises can no longer afford another massive lockdown. Checking in on the markets open on this last trading day of the week. Happy to report that we're back above 6,500 levels, up by 0.07%, so firming our way there after, of course, having seen quite a slide in the past 3 trading days on those rumors of a harder lockdown. This comes, of course, as President Monzon of the PSC has reiterated plans for the Bourse operator this year. He also has reassured investors that capital raising activities are going to be robust. He says so far, applications filed for the second half of the year is around 141 billion pesos already. Let's take a look at our big movers for the 4 minutes of trade. Check it out. Emperador leading the pack here, up by 4.4%. They had, of course, announced their earnings there, which had impressed several analysts. You've also got the LTG Group and URC in the leaderboard, and Ayala Land and Robinson's Land, both the biggest losers, at least in the first few minutes of trade. Now, let's take a look at PLDT. They're in the news right now. That's up already by 3 pesos. It's up by 0.2%. They're saying that they're weighing an $800 million telecom tower sale. They're saying this is according to several sources who are of course private as of the moment. They are working, according to these sources, with an advisor on a planned sale, and it could go up to $1 billion in disposal. Now, what are they saying? There might be transactions involving PLDT selling their towers and then leasing back these telecom towers. However, you've got PLDT President and CEO Al Panlilio still not commenting on this. He said that the company is still, of course, assessing their options. And finally, let's take a look at some new fresh earnings this morning. That's from Cemex, which is up a hefty 4.1%, trading at 1 peso and 27 centavos, possibly due to the fact that their first half net income was to the tune of 804 million pesos. That's versus 135 million pesos year on year. So, quite a huge jump there from at least 2020. Their first half net sales up 13% year on year. But what's really interesting here is the second quarter net sales that rose 43% year on year. But they have mentioned, of course, low base year from last year's lockdowns. But they did mention the cement volumes in the first half was 16% higher year on year. That's on the back of second quarter domestic cement volumes increasing by 45% year on year. Now, here to chat with us about the latest developments in the equity space, we have Ed Francisco, of course, president of BDO Capital. Good morning, Sir Ed. Welcome back.
Good morning. Good morning, Danny.
Sir, let's talk about this impending or possibility of a hard lockdown. There was some relief in the markets after all of these rumors started to swirl, but now it's still very contentious. You've got very different camps here saying that better now than later. It's inevitable anyway. And some saying we might not even need a hard lockdown, or we cannot simply afford it anymore. What's your stand on this, and how do you see this moving the markets?
Yeah, no, I agree, Danny. I agree with Mon Lopez and Ted Herbosa. Maybe it might be too early to have a hard lockdown. I think we have enough, I guess, restrictions already. We need it for the businesses already. We're seeing an uptick. In fact, maybe that's why the peso depreciated, because the traders are starting to import already. And then sayang naman talaga. Of course, health is so important. So I guess what we should be just focusing on is just to wear our mask and our shields, and also ensure that the vaccinations are rolled out and people get vaccinated. I think that's a bigger problem because there's so many people still who don't want to get vaccinated, and we should work on that.
Sir, are you seeing that if this hard lockdown doesn't happen, that businesses are better prepared this time around? Should there be a surge in cases because of the Delta variant, are you confident that we will be able to weather this storm without more stringent restrictions?
I guess the word I choose, Danny, is I'm hopeful. Maybe just as an example, in the BDO group with 40,000 employees, we have over 70% already vaccinated. So
Oh, wow.
hopefully I've heard immunity. So we've worked with the LGUs to get our people vaccinated, so we're ready to serve. That there should be no reason why the other businesses do that. We're economic frontliners, so we go to work every day because we have to serve you. So we're ready. We have A and B teams, we have multiple offices. If necessary, we can work from home. But again, because we have to be there, I think many companies are ready because we've had many of these. We've had the longest lockdown. So unless really needed, I'd rather we just all continue and with being and then LGUs have their more restrictive measures if necessary if they see a surge there, but not on a national or a city level maybe.
Okay, so no need to preempt for the time being. We're not at that level yet, but of course, if needed, then that's when we start thinking about it. Sir, let's talk about second quarter earnings here. And of course, very low base year from 2020. But even given that, are you happy with the results? Does it show in any way that, the second quarter was better than expected? Even as it was simply a recovery year, we didn't even reach the pre-pandemic levels.
Yeah, no, you're right. Admittedly, it's coming from a low base, but the fact that you've seen positive numbers, right? I think you mentioned it earlier. Meralco has great numbers. Emperador is showing very good numbers. So it's showing, I guess, resilience and an improvement in these various industries, especially, of course, in their food company. So that's great. It should continue, especially with the fourth quarter, of course, Christmas season, and then elections next year. So at least the momentum is starting already, and that's why it's so important that people don't get afraid, that they just stop buying, and then they start just keeping onto their cash because we also want to see the economy moving, and we want the SMEs to have jobs also. So
Sir,
I'm very very positive.
did you see a broad-based surprises, or at least a positivity in the second quarter, or are these limited to specific sectors and stocks? You did mention Meralco. You also have AEV, the power sector as well, performing better, at least year on year. But you've also got the likes of Emperador, those that are engaged in internationalization and export. So what's going on here? Are there specific companies that have performed well in the second quarter, or can you say that this is representative of the economy?
I think it's still the K-shaped recovery, right? Meaning some industries really will be doing well. So generally, food and I guess and even alcohol will be doing well as long as there are no liquor bans, right? And then of course power is very important because those are utilities, so you're seeing them improving, especially if industrials are open. So that is a big portion. Tourism is still hit, of course, understandably because people can travel as much and the airlines, right? But in the other industries, at least we're seeing pickups. No, telco, of course, is very important, so they're strong. Real estate, we're seeing also a bounce back, so that's good, and that's why, in fact, the REITs have been doing well because they have long term contracts. We're seeing steady flows. We're seeing renewals of their lease agreements. So at least that's positive. It's just really the airlines and the tourism side where they still have their problems, and we hope that will get fixed.
So I'll get back to you on the REITs, but since you already mentioned Emperador, I mean, if you take a look at this 1 year chart, it's just massive jump here. Is this in any way justified by their fundamentals, or is this a lockdown stock like you mentioned? Alcohol has been defensive in this period, or is this really justifiable in terms of their expansion internationally, even a possible listing in Singapore?
Yes. No, I think it's really justifiable because to give credit not just to them but to the whole industry anyway. If you remember, even San Miguel Food and Beverage, right? They did not do so well in their reported numbers last year, mainly because of beer, right? Which is predominant, the biggest chunk of the revenues. But that was because also of the liquor bans. But if not for that, it should be doing very well. So I guess they, and of course with Andrew Tan and Kevin Tan and leading the charge and their internationalization, that they should attract better numbers also. So we're very positive on that.
Sir, what about Jollibee, who's continuing with the international expansion even after having had quite some bumps on the road with the smash burger integration, coffee bean, etc. And they're still on that path. Some analysts had said before, that the premium of Jollibee is linked to them being domestically driven, and yet now they're continuing on that expansion path internationally. What's going on here, and are you happy with that strategy?
Yeah. No, we are. We were in constant talks with them. I guess just full disclosure, we're actually helping them on their current debt raising, right? So that's also part of the strategy. We believe in what they're doing. Uh, sure. I mean, there are these challenges with integrating the new acquisitions, but it's a really very good strategy because they want to have multi brands. Because admittedly, Jollibee is not meant for everybody in the world. Some people will not like it, but if they have multi brands, and that will attract everybody, that's better. And then they can maximize their suppliers, their chains, their expertise. I think it will do very well for them, and that's why even their stock price, right? It's recovered so much. So I think it's still a very good bet for us and a good proxy for the Philippines.
Okay, and finally, sir, back to the REITs. Philly REIT already, Phil REIT
Yeah.
pricing at 7 pesos. What does that tell you about the appetite for that specific REIT? They're also looking into Cebu property, integrating that versus the other REITs that are coming on board in the third quarter.
Right. So congratulations to the FLI group. They've done well. Very good yield, right? So in fact, that's why it just shows that there's capital coming in, there's interest. There's still a lot of liquidity in the Philippines. So after that, of course, you will have Mega World and then Robinsons and some other companies. So we're in very good. I guess investors will have a good many choices to invest in, and they can invest in all of them. But Mega World is expected also to do extremely well. So we're happy for that, and good tenants also, and good yields.
So can you compare the tendencies of the different REITs here? Or you said you're bullish on properties
Yeah.
in general, but that doesn't seem to be reflected yet in the stock prices of the property players. There's still a lot of difficulties there when it comes to a rebound. Is there going to be a differentiating factor here? POGOs or BPOs or retail mall tenants, etc. When you're looking at the REITs.
Right. No, there really is a differentiation. So I guess my recommendation to the investors, and that's why you will also see some yield differences. No,
Mhm.
FLI, they're very good, a very good, I guess, management team. But FLI has a small percentage of POGOs, and then I think their average duration is a little shorter. So these are published information I'm using. Mega World has no POGOs in in what they're offering, and there's also a very good growth contract, and I think they have over 5 years for their tenant agreement. So there's it's a different case, and maybe that's why the Meg World Group is targeting a lower yield because they feel also they have a different portfolio. So those are the keys really, and then I guess what's important also is what other assets they will inject and the quality, so that the future streams and the growth will be there. And then that's being shown in the pricing that you're getting the effective yields.
Okay, so it's more about risk appetite rather than and the right price yield for the risks that you're taking. And finally, sir, with all of this capital raising, you've still got an IPO in the works, Del Monte, which has, of course, been pushed and pushed and pushed, and finally might actually be happening. Are you still excited over this? They've been very transparent that they're going to be using the funding to refinance their debt, not necessarily for expansion. And plus, given the situation of volatility in the bourse and other capital raisings, will there be enough take up?
Yeah. No, as of now, everything is still a go. We're still very positive because really they've done well, right? Admittedly, there were questions on the primary, secondary, but it's really being used anyway to help the parent. At the same time, the growth is coming in China, in Korea, and other countries, and of course, they're very strong here. So we'll remain very positive of them, and then let's just wait for further updates from the company.
Okay, so one thing to, of course, be keeping an eye out there, but no shortage of capital raising here, at least in the second half of the year. Thank you so much for those insights, Ed
Thank you.
Francisco, President of BDO Capital.
Bye, Danny.
Here are other headlines we're keeping our eyes on. The Philippine consumer and retail sector is seen returning to pre-pandemic levels next year. Fitch Solutions said real household spending is seen growing by 4% this year after contracting by over 8% in 2020 due to the global health crisis. However, for 2022, Fitch sees household spending to grow by another 5.1% to more than 11 trillion pesos. And as a result, the group insists that a full recovery of the sector will only take place by next year, with more conventional growth returning in 2023. Fitch Solutions pointed out that consumer recovery still rests on the vaccination drive, this as the country continues to lag behind the rest of Asia, with only almost 10% of the Philippine population so far receiving one dose as of July 23rd. The BIR has suspended its recent order that imposed a 12% VAT on previously exempt raw materials sold by local manufacturers to exporters. The relief for pandemic stricken exporters was granted after outcry from the industry. Philippine Exporters Confederation's chairman George Barcelon said the deferral is a ton of the off of the shoulders of both direct and indirect exporters plus the MSMEs. Automakers are likewise facing less uncertainty following the Tariff Commission's recent finding that there's no basis for the imposition of safeguard duties on vehicle imports. The Commission said the cars subject to investigation were not imported in increased quantities and therefore could not seriously injure local jobs. As such, the Tariff Commission recommended no safeguard measures to be imposed on imported, completely built up units of passenger cars and light commercial vehicles. And that's a first look into the business day. Today is Friday, July 2021. Catch Business World live for the market close. That's at 3:15 p.m. today. I'm Danny Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.